Well, Vestas Wind Systems, the global leader in wind, has released the results of its global consumer wind study for 2011 together with Bloomberg. And they have launched the Corporate Renewable Energy Index. The Vestas conference was held here in New York yesterday. And joining us to discuss what was covered, Morten Albaek, Chief Marketing Officer at Vestas, and David Walker, Director of Environmental Sustainability at PepsiCo, and a speaker at the conference. Gentlemen, thank you for joining us.
Thank you.
Tell us about the results of what you found.
Adam, there's two key findings I would like to expose first. The first one is that 25%, every fourth of all the American consumers are willing to pay a premium for products which is produced in renewable energy. Furthermore, that 40% of the American consumers will prefer and recommend brands to a higher degree that are basing their business on renewable energy than those that are actually based on fossil fuel or the energy of the past. And those two things together is creating a fairly interesting business case.
So people want to go green.
Yes, and actually on a global level, it's even more, because it's 65% of the global consumer community that wants to prefer brands that are based on renewable energy.
Okay, now David, you get a chance to keep Morten honest, all right? Because you're with Pepsi, and effectively you're trying to make PepsiCo greener.
Oh, yes, indeed we are. And we've been actually looking at renewable energy for a number of years at PepsiCo. Back in 1997, we became one of the largest purchasers of renewable energy credits, purchasing some 1.2 million of them for a 3-year period of time. Since then, our strategy around renewable energy is evolving and changing. And we've actually gone to direct investment, where we're actually investing in renewable installations directly. For example, we have one of Vestas wind turbines operating in India, a 1.85 megawatt unit that provides enough electricity to feed the majority of electricity that we need in one of our plants in India.
And why limit it only to India?
In that particular case, the situation for wind in India works so well. It's an interesting strategy. Our thought was not to build a big wind turbine next to our facility, but rather put the wind turbine where the wind is. So we put the wind on the eastern side of India in the eastern mountain ranges in Tamil Nadu. And from there, we then feed that wind electricity into the grid, and we take our benefit on the other end. So it's turned out to be a very good strategy, and our team in India were the ones that came up with it. So that's where we began.
In other words, you don't actually have to be near the wind. You can generate that power, sell it to someone else, or get a credit for it, and then you, in turn, can buy the energy elsewhere. I
think in our case, we have several wind turbines operating now, and that has turned out to be a very good business strategy. So we use PepsiCo's capital to invest, and then we use a third party to operate the wind turbine, and we feed it into the grid and take the benefit on the other end.
Now, Morten, how many projects do you see that are similar to this one, as opposed to people buying a wind turbine to power a factory that's right there?
But we are seeing a whole new customer segment occurring, which we call the carbon-conscious corporations like PepsiCo. IKEA is investing directly in wind, Google is investing directly in wind, and so on and so forth. So there is a new customer segment in the business of wind, and they are, you could say, investing in wind both because it's actually a good business case, but also because it provides brand equity to the brand. And as the study shows, the consumers will prefer brands that are going down this path as PepsiCo is doing. The one thing which is then the challenge is to make it transparent for the consumers that PepsiCo, IKEA and Google are actually doing what they're doing, because as soon as that happens, the consumers will prefer them.
All right, so how do you do that? Do you put a little label on or do you put an icon on a label with a windmill that says, this was made by wind? I mean, is that how you do it?
Actually, Vestas Wind Systems have taken an initiative together with UN Global Compact and WWF to create the world's first consumer label for a single energy source, wind energy, called WindMade. And that will be made available for the corporations in the world by end of September. So at that time, there is actually a world standard, a global standard that can be used by PepsiCo, IKEA, Google, and the others that are leading the game in these very days, months, and years.
So David, would you ever put a windmill logo on a Pepsi can and say, this Pepsi was made by wind?
Why not? This is a new concept, but it's one that we've played with a little bit ourselves in terms of labeling our products with something that's environmentally friendly. For example, our potato chip brand in the UK is Walker's. That was the first brand to actually put a carbon footprint on the front of the label. And we've also tied in our Sun Chips brand to the sun. We have a large solar photovoltaic unit in Modesto, California, and have tied that brand into solar energy. So there are marketing opportunities here.
Now, does wind actually save Pepsi money? Can you show it as a line item on an income statement?
Wind is competitive with respect to the economics in which we installed the unit there in India. Now, when you take a look at renewable energy, it will, compared to what fossil fuel is selling for today, it's certainly a bigger investment and more expensive up front. But what we think we need to do is take into account not just the traditional IRR calculations, but rather also take a look at what does this do for our shareholders down the road. This helps us decouple ourselves from volatile fossil fuels. It helps ensure our license to operate if we're under attack from community limitations on resources or potential regulation. So there are additional shareholder benefits to investing in renewable energy.
Now, Morten, when you are selling windmills to someone, do you provide any sort of financing? Do you make it easy for them to buy them?
I think we make it easy for them to buy them because they have high quality and they are reliable and they are going to produce energy that is put into the business case, which is the foundation for the investment. So we can provide turnkey solutions. We can provide just a turbine. We are a full service provider when it comes to wind energy. You need to be so when you are the world's largest and global player inside your own arena.
And as Dave is just saying, it's a lot of money up front. So how many years or months does it take to recoup those costs and then start showing a profit or being competitive with fossil fuels?
Now, when it comes to the whole discussion about being competitive with fossil fuels, let me just get one fact on the table, and that is that fossil fuels get public subsidies for around $400 billion in 2009 and 10. Renewable energy only got $37 billion in public subsidies. So if we just take the 400 million out of the fossil fuels, or 400 billion out, then renewable energy is actually fairly competitive as of today. But there is some support schemes out there which is making it very, very difficult to make it.
Understood. Gentlemen, thank you for joining us. I'm sorry I'm going to have to cut you off. We've got to go to commercial break. Morten Albaek, CMO of Vestas, and David Walker with PepsiCo. Again, gentlemen, thank you for joining us.